Good afternoon. Investing is not easy. It's very hard. So one thing I learned many years ago was follow a smart investor. And so we looked at Warren Buffett's done very well long term. And today we're going to share with you some things that we've learned from Warren Buffett.
Oh, absolutely. As you said, it's so important. I mean, investing, it's not easy. And, it's so important to stick to investment rules.
Mm-hmm.
And that's one thing we really do here is we don't get caught in the hogwash. We really stick with what works and we stick to our principles. The first thing we look at is you got to understand what you own. And that doesn't mean, I use or I drive a Tesla or I use Amazon or I use Netflix. That's not enough. Just because you know the name doesn't mean you understand the business.
Yeah, you got to understand the business, and understanding the business, you got to talk about the value. What are you really getting for what you're paying? They may have a great product, but if the company is overvalued, that's not a good thing. And then you also, too, want to understand the competition. Who are you competing with?
Oh, absolutely. And kind of just going back to understanding the business, gosh, we get some calls on the radio show. Be sure you tune in tomorrow morning, Saturday at 8 a.m., AM 760. We get some calls and I say, what does this company do? I don't know. I just got an investment tip. Don't invest in that company if you don't know what they do. That's a good start. But as you said, you got to understand the other things as well, such as the valuations, the balance sheet, and who they're competing against. And next we look at you're buying a small piece of a large company. Simply means if you wouldn't buy that business, the whole business, why would you buy a small piece of it?
And what this does, it takes away your emotions. Because a lot of people buy stocks, and it's like a gambling chip and so forth. If you look at it this way, that you're buying a small piece of a large company, it really brings down the emotions because you're saying, wait a minute, I don't care what's going on because I own this insurance company. I'm not looking at what's going to do next day or next 2 days in the market. I'm saying, where is this big business going to be 2, 3, 4, 5 years from now? Those are the investors, and that's how we've done very well over the long term by buying small pieces of large companies.
And finally, we look at you got to ignore the noise. What that means is you're going to have temporary problems. Business, I can tell you, it's not perfect all the time. You got to ignore those temporary problems if they're fixable. If they're not fixable, probably not a good company to own. So again, short term, you got to ignore that short term noise. Look at it over long term. Warren Buffett says, I don't care what the stock market does over the next 5 years. You could close it for that time frame, and I'd be all right.
And there's always going to be outside noise, trade wars, all kind. I mean, with Greece, debacle, all kinds of
Presidential
things.
elections.
Elections. Elections coming in November. Always an outside noise is going to try to distract you. Do not let it distract you. Stay focused on the business you own and look what the earnings are going to be, the debt, the cash flow, all these important things. Forget about all the outside noise because that's going to get you off track.
And if you don't have time for that, give us a call here at Wilsey
That's
Asset
right.
Management.
And tune again tomorrow morning, 8 o'clock on AM 760.